This is the Friday, July 29th, 2016 version of the Market Plus segment. Joining us now is Angie Setzer. Angie, welcome back.
Thanks.
You are the goddess of grain on Twitter. That's what you're known as. You are a Twitter rock star, and thanks to you, we have a pile of questions for Angie Setzer. So we're going to kind of do a rapid fire Market Plus.
Let's go.
I'm gonna kick it off right here.
I got my helmet.
You got your, all right,
Yeah.
You're ready.
All right.
Doug in Denton, Kansas wants to know, should unsold 2016 corn and soybeans be stored for a winter-spring rally on demand and 2017 weather?
If you have the ability to do it, if you're not putting it on commercial storage, therein lies the fun part is, if you're going to pay for commercial storage and hope like heck that the market's going to move, you might as well do a minimum price contract, in my opinion. At least then you know what you're paying in storage. If you go out and spend 15 cents on an option, it's going to be cheaper than paying commercial storage till March.
Mm-hmm.
You can buy a March option, something like that. And that way you know that you've taken the minimum price, put that in play. If you're going to be able to put it in the bin and you've got your cash flow needs covered and your storage space covered, yeah, I would wait for a...
We've seen it work in the last 2 years.
And I think it will work again. But it goes back to what we talked about in the show, where the best opportunity does not necessarily equal good. It could be a lot better than where it is right now, but if you're holding out to see, perhaps a 450 high with a 20 over basis, you might not want to hold your breath for it.
Right.
So it's all about being smart and having a plan, but also knowing, what your cash flow, space, all of that, those needs are.
Because you're looking at holding for 6 to 8 months,
yeah,
maybe 10 months if you're waiting for a similar setup like this year and last year.
Yeah.
There's a time value of money
10
question.
months is rough. And that's what, but you have to keep in mind too, for a lot of guys last year, and that's what guys tend to forget about, is one of your best opportunities when it comes to basis and things like that comes between Thanksgiving and Christmas, because your bin doors have shut, no farmer is looking to sell, every buyer is lonely, he needs to cover his needs for January forward. Most growers aren't thinking about the fact that they need to pay a bill January 15th because they just wrapped up harvest, and the last thing they want to think about is selling their grain. So the last couple of years we've seen a post-harvest market rally up towards 385 or so on the Ds, and some of the best basis opportunities. So that comes down to it where, just be smart about what's going on, pay attention. And most of the times, those times that you don't want to be paying attention are the times the best market opportunities are coming about.
Chad in Randalia, Iowa is curious, and he put this as a poll on Twitter, but he wants to know what's the best way to cope with the dismal markets.
Can I say drink?
I was going to say whiskey. At least you're consuming some corn.
That's just it. No, I think the best way to cope with dismal markets is to shut the noise off for a while. In a bearish market like we're in right now, psychologically speaking, everything that you're going to read is bearish. Because every broker out there, every trader out there, every analyst out there is going to be looking at everything that they need to see to kind of formulate this bearish setup. So there does come a point in time that I tell a lot of my guys, shut off the screen. Take your family on vacation, albeit a cheap one because the market prices stink, but something of that nature. You need to focus on what you have good, and ignore something that you don't have control over. And so right now we're waiting for that Titanic, we're waiting for the boat to flip, we're waiting for that narrative to come back to a bullish narrative. You're not going to miss something in one day.
Right.
Because you're not going to sell a 20-cent pop in soybeans anyway.
So take a breather.
Yeah, if
relax.
you are, put a target order in and still take a breather and relax. But don't sit and stare at the TV hoping that something's going to change or that someone's going to say something bullish that's magically going to fix the market, because that's not. So that's the best way in my opinion.
All right, Glenn in Kansas. And this is something you probably have some experience with, working with your Michigan growers.
Yeah.
What are some marketing tips in a drought? He says some areas the crop is a dud.
Yeah, there are a lot of areas that the crop is a dud. And unfortunately, the horse is out of the barn. I can't sit here and say, well, you sell it $450 and go home. You
sell it a month ago.
You sell a month. Yeah, that doesn't work. Marketing a crop in a drought, it's the same exact way that you would go about marketing a crop in a regular year, except for you just have to be aware of your production shortfall potential. You're not going to outsell your APH anyway in a normal year. Until you know that you have confirmation on the production side. So the one good thing about being in a dry spot or having an area that the crop is a dud, that goes back to me telling you to pay attention to your local market structure. Like in our area, for instance, like I said, we're trading 25 to 30 over basis values now. Those basis values aren't going to disappear overnight because we're going to be tight into harvest, which is also going to be a continuation of a tight supply type setup. So just, I guess, take heart in the fact that your basis is probably going to be better than the guy up the road who's seeing a good crop. But also know that when the price is good, even when your crop looks poor, you're going to have something. Right. And with insurance, you have a certain level that you have a safety net on that will help you cover any contract shortfalls, things like that. Also, big thing is just make sure that you're talking to your buyer. If you do have concerns that you have production shortfalls, communicate that with them and figure out what your options are on those bushels that are contracted. You know, do you roll your corn forward? Do you roll your wheat shortage forward? Something of that nature. Be prepared, but also don't panic. It's really easy to look out and think that it's an utter failure. But most of those times when you're expecting an utter failure, you end up being somewhat pleasantly surprised.
Okay. Next question. Dan in Prairie City, Iowa, at Dan DV3 wants to know, how much will the recent softness in the U.S. dollar do to support the corn or soybeans? And let's add wheat to that picture. Wheat. When will it turn?
When the buyers want to buy. Does that sound facetious?
So
I don't mean to.
250-point drop in the dollar.
It's big.
Clearly wasn't enough to bring them in big
right
time.
now, it's not big, not enough to bring them in big time because no one's really certain if it's a stumble or if it's an actual change in trend. Okay. So what tends to happen that a lot of people, you'll hear that, oh, it's the futures market, we trade on futures. No, we tend to trade on confirmation of bias, and then we develop into this futures side of things. So you've got to see, for one, you've got to see confirmation that the buying the dollar trade has been exhausted. And a lot of people will tell you, and I agree with them, obviously the strong dollar has not limited our export interest. But the narrative of a strong dollar does limit your buying interest. So a weaker dollar will help to get a rally going if there is a reason to rally or if the narrative switches, but we're not necessarily trading one-to-one where every time the dollar moves lower, the corn market or whatever has to move higher.
It's fuel, not necessarily the ignition.
Exactly. Causation does not result in correlation or whatever. There's a little bit of a hand-in-hand trade, you could say, but it's not, it can separate on a day-to-day basis.
Okay. This one's from our buddy Jared in Oklahoma at Jared McDaniel on Twitter. This is a big question, but we're rapid fire.
Yeah.
So is there enough demand to chew through surplus in wheat and corn, or is a production shortfall the only out?
Production shortfall is probably the only out of a huge surplus that we're in.
Does it need to be a domestic shortfall to really give us a bounce?
No. I'm really interested to see what happens with China. I mean, I don't think the flooding in China is getting enough attention. You've got 3 million acres plus of some of their prime farmland right now that is underwater. And unable, I mean, not to mention the loss of human life, which is awful, the loss of their hogs and things of that nature. And that's how you know you're in a bearish market, when the loss of hogs is bearish meal and not bullish hogs. That, you know what I mean? That's when you know that you are entrenched in a bear market and you have to shake off the shackles of that first before you can go anywhere. But I think we need a production shortfall. I think all eyes are on Brazil right now. I don't think we have a necessary understanding of how tight their pipeline is possibly there.
You alluded to that, to the feed grain implications this could have in the next year. Yeah,
and we have to see what happens there because the country, the ag minister of the country right now is trying to get guys to plant corn. Economics are saying plant soybeans. In either event, you're not going to have new crop supplies arrive until February at the earliest either way. So there's a lot of that going on. La Nina, if we see that kick in, tends to have a bigger impact on South American weather. But I do unfortunately think we need to see a global production issue in order to know that we're chewing through those stocks. And it could be the potential of the production shortfall in China ends up pulling the sheet off from the stocks that they have.
We get an idea of whether or not they
have to put up or shut up.
Final question, second to last question. Ag partners in South Central Illinois want to know, where's the producer profitability over the next 18 months? Crystal ball question.
I mean, from a producer standpoint, it's all individualized. A producer will decide when he's profitable at that point in time. Will the producer be profitable again? Yes.
Okay.
I mean, he will have another opportunity. He did this last year. Everyone said he wasn't, and he will have another chance. And it all goes back to being aware of what your new ranges are, Do not suffer from, everyone talks about FOMO, the fear of missing out in social media. There's more of a fear. Farmers were the first to introduce the fear of missing out.
Yeah.
And that is the fear of missing out on that next nickel or that 50 cents.
Because it always goes up the day after you sell.
Exactly. And that's great when you scale sell up.
Exactly. All right. Final question.
Yes.
We're asking our analysts to define terms heard a lot in the futures market, in the brokerage trade. We want to ask you, what's a double top?
Oh, a double top is easy. I call it the knock 3 times on the, the knock 3 times on the ceiling, if you want me. That's so you hit the same top twice, and most of the time it turns into a resistance. So you'll see it, you bounce up to 448, you fall back, you come back up to 448, and you fall back, and that tends to be a double top. Triple tops 3 times. And each time you hit something and don't trade through it, it becomes stronger.
Okay.
So
and if you do trade through it, then
it becomes your support, and you're on your way to the next resistance level.
Perfect. Angie Setzer, thank you so much.
Thank you.
And thanks to all of you for sending in your questions via Facebook and Twitter. Please continue to do so, and we will get expert analysis right to you. Have a great week.